There are a huge number of money lies that you've been told throughout your life that are keeping you trapped in the position that you're in. A lot of people are told investing is risky or complicated. And to burst the bubble, once you get started, investing really isn't that difficult. What is scary is the thought of not investing and not being able to retire when you hit the age 65 because you just don't have enough money saved up, or your money depreciating in value because inflation is increasing and your money's not keeping up with this level, or you losing out on thousands and thousands of pounds because you haven't invested your money and it's just sat in one single account, not growing. One of the things that has made investing really intimidating is it's plagued with a huge number of complicated finance sounding terms that really don't mean that much. Once you learn 2 or 3 of these, you'll be on your way and they're not very complicated. So when you think about investing, do you picture a man in a grey suit on Wall Street shouting about random finance terms and doing something that looks really complicated with a huge bunch of graphs? In reality, investing is not like this. And you also don't need a huge amount of time to get started, because once you've invested there, you just keep the money, you hold it for multiple years. So there is a big difference between day trading, which is what's typically spoken about on the internet, versus long-term investing. Now, day trading is when you buy and trade stocks every single day. There's people in their rooms looking at multiple screens, comparing stock prices going up and down. And statistically, these people are not likely to make that much money unless they really know the markets and know what they're doing. For most people, the common approach that is taken is long-term investing, and Warren Buffett himself recommends this approach. What you do is you pick an index fund, which is basically a basket of companies, and you put your money in here and leave it for a long time. The longer you leave your money, the more likely it is to grow and increase in value. Here are the chances of you making money on your investment versus the amount of time that your money is invested for. So if you invest for 1 day, your chance of making money is 50%. This is basically what day trading is. If you invest for 1 year, your chance of making money increases to 68%. If you invest your money for 10 years, that increases even further and you have an 88% chance of making money. And if you invest for 20 years, you have basically 100% chance of making money. So you see, investing is not that risky if you're investing with the long term in mind. So you need to be thinking somewhere between 10 and 20 years ideally, which is why it is perfect for retirement. So if you invest for the long term with your money spread across a wide range of different investments and assets, then you are highly likely to see an increase in the amount of money that you put in. So you could start doing this as soon as you start working. You start investing £170 a month, and then when you retire at age 65, you'll have £1 million to be able to live on. Now we've debunked these financial myths and shown that investing is not risky or scary or intimidating. I've got another video linked here around the benefits of investing.